I bought some new baggy jeans, and I went and met a friend. And that, not like ultra baggy, like in the grunge kid days, because I wore those too, but like just normal baggy jeans.
Yeah.
And they couldn't stop laughing. They genuinely couldn't stop laughing. They said I looked like Alan Titchmarsh from the 90s, and they couldn't. I just went home. I went home. I had one drink, and they go, so I can't do a few more as this, because they could not stop laughing. And ever since then, I haven't left the house.
Hello, everybody, and welcome to Short Fuse. I'm Duncan Roberts, and I'm here with Ollie O'Donoghue. Say hi, Ollie.
Hi.
Excellent. We've nailed that. How many takes was that we had to do for the intro?
16 or so now,
something like that. But anyway, we are here and we are back to talk about our intelligence dashboard. If you want to have a look at it, please go to Ollie. What's the website?
Don't put me under pressure. I got it right. https://www.shortfuseresearch.com.
Yes. Or you could just say short fuse research. No, stop. But yes, you can go and have a look at it at shortfuseresearch.com and click on Tech Tracker. You can see our trajectory chart, which shows the trajectory of various technologies, which Ollie has written a lovely little blog about as well for our September review of how the technologies are doing and their perception with people who are building using that technology and how that technology is doing in the public eye. So do you want to have a quick go over what you wrote about, Ollie, and what the trajectory quadrants are showing right now?
Yeah. Definitely. My pleasure.
It would be great just to finish there. Do you want to? Yeah.
Anyway,
on to other stuff.
Yeah. He'd love to, everyone.
All right,
I think so. My favourite takeaway from the trajectory chart, and Duncan will know this, who knows me the most, and any former analyst buddies of mine will know, big fan of cloud. I don't think cloud gets as much love as it should. And cloud is the only technology currently in our freshly named momentum zone, which is
the only one with its current bubble. There are a few that have flirted with it, but its current bubble is in the momentum zone.
Yeah, and obviously it gave me the great opportunity to have this wonderful title, Cloud Floats Alone in the Momentum Zone, which is hard.
You're a poet and you had no idea.
Hard to say when you think about it. But I think this kind of is testament to the fact that it's a tried and tested technology. Builders are happy with it. And bizarrely, I kind of, what surprised me is that the public are also fairly happy with it. And I think a big part of this is that cloud is very much in vogue today. When you think about all of the conversations around investment in AI, a lot of it boils down to cloud data centers.
It's a semantic thing though, isn't it? Because if you talk about cloud, people are like, yesterday's news.
But I don't think they are, but okay.
Well, you might not be. You'd get very excited about it. But
the technology trends tracker, Duncan, actually disabuses you of the idea that cloud's boring.
Well, no, actually, let me clarify what I'm saying here, though. We've labelled this cloud, but behind the word cloud are several subterms that we're actually searching the data on. And it's things like next generation infrastructure, edge computing, fog computing, mist computing, which are some of your favourite things in the world. And all of those different subterms that relate to that kind of infrastructure. So whereas you may say to somebody, I'm surprised that cloud is up in that momentum zone. But if you were talking about the infrastructure that's driving the AI deals and all these, mega trillions of dollars that are floating around for infrastructure for these Gen AI companies and these AI companies in general, then it completely makes sense.
Well, I think my point still stands that I'm surprised that the public at large are saying positive things about cloud or indeed edge and fog computing. So I get why the builders are. I 100% get why the builders are. Mm-hmm. But the fact that it is the furthest right aside from IoT in public momentum, so it's the most hyped in many respects as far as the public are concerned, I find genuinely surprising. When you've got, blockchain, AI, some of these really cool, very fashionable technologies, humble cloud is really the winner of the day.
But I think there's an interesting split there as well, though, isn't there? Where the infrastructure and the talk around the infrastructure and cloud and the data centers behind it is getting a lot of momentum. But the talk about the technology itself, people are a bit more skeptical about. I think that just speaks for specifically this month and fairly recently. So much of the talk has been around infrastructure and energy usage and these big mega deals that are seemingly going on between all this fairly small, close-knit group of companies. There's much more talk about that at the moment than there is about the technology itself, which is quite fascinating.
Yeah, I think that's probably what's driving it up. So what you can see is a big decline. If you're all following us live on our technology tracker, or indeed the blog, there's a big bop down over the last month. And I think part of that is it's a big victim of this bubble bursting narrative that we're seeing around AI. So you're right, it's very difficult to decouple in many respects AI investment, because the huge capital investment in cloud data centers, next generation infrastructure, that's often discussed at the same time, that part of the big dip is in lockstep with AI nosediving as well. I mean, nosediving is probably a bit of an overstatement for what's going on with AI, but there's a big jump. AI was very briefly in the momentum zone alongside cloud last month, but has declined down into the hype trap, as we're calling it. And I think they're working lockstep, which I don't think you would have seen 2 or 3 years ago. But part of it is that big investment story. And I think, if memory serves me well, we probably started talking about the AI bubble bursting 3-4 months ago, if not longer on the podcast, but certainly on our website, we started talking about it 2-3 months ago. It's now being discussed in central government, in banks, the Financial Times, the Wall Street Journal. Like, everyone's suddenly talking about the bubble bursting, and have done over the last 2 weeks. And I think that's what's pulling these down as far as builder convictions are concerned. Like, there is a genuine risk that a lot of the potential of AI investment following through to next gen infrastructure falling foul, like disappearing effectively. So the trillions and trillions and trillions that we would expect to see go into next generation infrastructure just suddenly stopping because the AI promise isn't being delivered.
Yeah, and I don't think the AI companies are the big tech companies or whoever, without naming specific companies, are helping themselves. Because I saw a thing on Reddit the other day that made me chuckle. It was an old, I don't know if it was the Three Stooges, but it was something like that. 3 kind of gnarly looking men standing next to each other in a black and white film, all handing £10 backwards and forwards between each other and saying, well, if I give this £10 I owe you, but I owe you this. And they were just moving this £10 between each other. And on them were plastered, over the top, like OpenAI, NVIDIA and Oracle. And they're just all passing this money between them. And somebody commented, said this, but every time they move the £10 between them, their market cap goes up 10%. Right? So, and it's true, right? And I think people are getting a bit fed up with that. So it will be interesting to see next month if cloud dips into the hype trap alongside AI. The other thing that I saw recently, and it's Sora 2. I don't know if you've seen Sora 2 yet, which is OpenAI's video model. And not only did they release a new, very capable video model, they released an app alongside it, essentially a social media app for AI videos. And people, the discourse, the community are getting quite frustrated with this, because there's all of this conversation around next generation infrastructure and this vast amounts of money flowing between these companies. There's OpenAI releasing essentially a social media app for AI generated videos and just popping your face on, or Sam Altman's face on, a meme video and sharing it with people. And it's invite only. It's still managed to get loads of downloaders, more so I think even than when ChatGPT was released. But what they did is that it was become so popular, they've then kind of downgraded it. There's lots of issues around copyright with using copyrighted characters, and it's getting a bit of pushback. But not only is that pushback directed at the restrictions and the guardrails that have been put around the model itself, they're like, hey, OpenAI, didn't you want to cure cancer? And didn't you want to do this for businesses and create universal basic income and change the world? And now you're just passing big bucks between your mates and releasing TikTok for AI videos. Where's the value? And I think it's just increasing people's anxiety about the bubble bursting.
It's all happening rather quickly and all at the same time, isn't it? The disillusionment. And I think that's part. I mean, if we go over to AI and generative AI, which we track separately, both have gone down. So AI is a little bit further ahead in public perceptions, but lower in builder convictions, I think, broadly speaking, although they're very similar trajectories, as you can imagine. If we were to dig into whether or not the bubble's bursting, I think we probably have our perspective, and anyone who reads our blogs will see that quite clearly coming through, I think. There was a really interesting piece of analysis from The Economist. It was kind of just a thought experiment of what happens if OpenAI goes bust. Because of all of these different relationships that are intertwined with each other, and effectively that promise of cash that, again, we see potentially impacting the perception of something as robust as cloud in our tracker, right? Because, hey, if this cash doesn't flow through, then there's a big problem. There's all kind of promissory notes being passed around. Hey, I'll give NVIDIA, you give me 300 billion and I'll buy 300 billion of your chips. Great, thanks.
Yeah.
And then, to your Three Stooges example, inexplicably, everyone's valuation goes through. It's just what's happening. Now, the conclusion they came to is actually the chip makers probably fine, because there's so much demand outside of OpenAI that it doesn't matter. They'll have new customers. There are a lot of other companies that probably would struggle, right? And there are two that I would draw attention to. The first is all of the AI startups, which is huge. We focus on the big companies, but there are hundreds of
the rappers, the people who've just built a wrapper around GPT, and they'll just get eaten up by some small piece of functionality that OpenAI will release or whatever, and they're not actually doing anything new. They're just wrapping around an LLM.
Yeah, or they'll go bust. Right? Yeah, they'll just go bust. They'll struggle. So there are two things that will probably happen. The first is, and again, we're kind of assuming if OpenAI goes bust. And I don't necessarily think that's that outrageous that OpenAI would go bust. We wrote an article on our site a little while ago. It's like, well, actually, if you look at OpenAI's own research, a lot of what people are using it for probably just isn't enough to pick an OpenAI product over, for example, in a workplace Copilot, which probably integrated already in Office, or very specific safe tools for things like counseling and therapy that suddenly OpenAI would just get kind of sidelined from completely, right? So the idea that OpenAI may not necessarily be the linchpin of the ecosystem isn't actually as far-fetched as I think people would think, which is part of the reason, I guess, why The Economist did the thought experiment of what happens if these guys aren't here. But I think if you were to remove that, the rappers are a big one, but also it just hoovers a lot of oxygen out of the room. So if OpenAI collapses, then would VCs fund other AI firms with the same fervor? There's some data I pulled out from CB Insight, which says there are 498 AI unicorns at the moment with a collected value of 2.7 trillion. So they're just the biggest. There are thousands of them. I mean, you can't move these days for someone launching an AI product.
Yeah.
But I think what's more interesting, this came from a company called Decibel, which is a VC firm, and they track something called dry powder, which is effectively how much cash do VC companies have to spend, and that'll be the lifeblood of these companies. And the second they stop being funded, you kind of get that contagion of just like, it's very difficult to be funded as an AI company anymore. Oh, the bubble's starting to burst. Bubbles can burst from all sorts of different directions. And part of their data that's quite interesting is at the start of the AI boom, dry powder, as they call it, it's about the amount of free cash VC firms had. It's about 300 billion. By the end of this year, they reckon they've gone down to 221 billion. And by the end of next year, only 135 billion. So it's going to be much, much harder to be funded, is their argument. Right now, 60% of VC money is going into AI.
That's crazy.
So it's a big, if you think so 60% today and it's dropping by that level, then that could be the spark that lights the fire. The second trigger, which actually comes right at the end of the piece of analysis from The Economist, is that, so generally speaking, contagion won't be an issue amongst that super ecosystem of big companies because they'll find out the customers. And it's just this one little line, which is just like, unless the technology isn't as good as it says it is, right?
Yeah.
It just doesn't deliver on the promise. And I actually think, again, that's not inconceivable. I don't think that's inconceivable at all. to your point, hey, we're going to cure cancer with this thing, to now being, well, we're going to rip off Matt Groening by doing loads of Simpsons shorts. And I know it's a very dismissive view of what the technology is capable of overall, but I think the economic potential after 3 years, you should start seeing, and we're not. And I think businesses should start seeing results. And again, they're not. I think the impact on GDP has been negligible so far for something that's supposed to be so sweeping and had all the promise it did 3 years ago. And the big part is a lot of the cost, which is obviously a big part of the economic value proposition, hasn't been passed on to the end users yet. Yeah. And those multi-trillion capital investments have to be paid for by someone at some point. So this isn't ever going to be really, really cheap to the point where it's not a very difficult economic conversation. The second those two start, that kind of disconnect starts being laid bare, I think that could pop the bubble. So all of the chatter right now, I think, is timely, and not necessarily to the advantage of the big AI firms.
No, but I wonder, just as you're talking about that, I wonder, is the bubble bursting such a bad thing? Like, economically, so much of the world's economic growth, or at least the Western economic growth, is grounded in AI companies these days. So I do worry a bit about our pensions and things like that.
I was about to say,
yeah, but
it's a bad thing if you've got any money anywhere.
Yeah. But let's just take a step back and just look at the technology in these companies itself. I don't think the bubble bursting is a bad thing. These wrappers that we talked about, these companies that are popping up all over the place, not a huge amount of people will miss them if they go. The hype around the technology, you look on Twitter or X or whatever, or Reddit, and people going, "Oh, I've just seen the future and it's this." Like, that can stop, please. When the dot-com bubble burst, it was, the internet didn't go away, and businesses that actually provided value didn't disappear. So I wonder if it needs to happen to an extent to actually start getting value from the technology and having realistic conversations about what it can and can't do, and stop overinflating this stuff more than it needs to be. So in some ways, not economically, I look forward to the bubble bursting so that we can all be a bit more rational. but in other ways, obviously not.
I'd prefer it if just a little bit of air was gently let out of the bubble over a manageable period of time. I was looking up, funny enough, I was trying to figure out whether or not, and I went down a rabbit hole, and there's going to be no real answers in what I'm about to say, but I started looking at if there are any historical precedents for an ecosystem of companies effectively focused on the same thing. Mm-hmm. So think automotive, right, and then steel plus oil and that time, driving economic expansion, and effectively market cap of those collective companies at the same pace as we're seeing now. Just see what happens. And there are very few examples. And obviously, you end up going down this. Well, the Dutch East Indies was the biggest company, and they did all these sorts of things. So no real answers there. But I did look at the dot-com bubble, and what we forget about that. Well, what I forgot is how many of the companies that went bust were just trying to do what Amazon does.
Yeah.
At the same time. So there are an incredible amount, like boo.com, an incredible amount of like booksellers who are like, we should sell books online. Mm. And if you were to look back and say, well, Amazon was really silly for doing that, it would make no sense, because that's what they started out. They grew and grew and grew. They grew through the dot-com bubble, and then became what they are today. So sometimes when we look back, you kind of think, oh, the dot-com bubble, that's such a crazy period. But actually, we got, Google came out of that dot-com bubble. A lot of very big companies. So we may see that, if there is this bubble that wipes out quite a few companies in the ecosystem, you'll have a winner-takes-most market. And it's difficult to say whether or not that's necessarily a good thing or a bad thing, because, you
the centralization.
Regulating. Well, yeah, you think about all of what we have today, where it's 4 or 5, FANG, plus a few others that own most of the digital space. And part of that is because the sweeping diversification of the dot-com funding craze got wiped out in the dot-com bubble, and then everyone else kind of filled the space. Mm-hmm. So whether or not we see something like that, I mean, it does seem inevitable that the bubble will burst at some point, because the thing with the bubble
keep
is
going
the second
on like this.
Well, yeah, the second everyone starts poking a bubble, then it's going to pop.
Yeah.
And that's what's happening right now. So I mean, my view is the second it moves into like, hey, the Wall Street Journal, Financial Times, all these guys are talking about it. And a central bank has said, right, be careful, everyone. Then the bubble's pretty much going to burst because, you're poking it.
Yeah.
So it's going to pop.
But it's interesting. It's interesting you should bring up that winner takes most. Like what's on the other side of the bubble bursting? Is it complete decimation of the AI industry? Probably not, but it is more centralization. And we were talking before we started recording about what we were going to talk about from our intelligence dashboards and our Discover charts, which you can see at the bottom of the tech tracker, which is where the chatter is amongst the technology community. And interestingly, one of the highest discussed themes is around decentralization and decentralization communication protocols. I had a little bit of a look into it. And a lot of these are things like decentralized social media platforms or decentralized payment platforms in terms of cryptocurrency. But in fact, the top discussed theme is around mass surveillance and general centralization and government oversight of various technology platforms. And I think really that's not disconnected from what we're talking about here. And the worry is that if this bubble does burst, we get more centralization. And I think the builders, the people who are building this technology are super keen on that not happening. They want the early days of the chaotic internet, which was much more decentralized. It was much more about ownership of your own data. And that's why we see this being discussed more and more and more. And people are concerned about what happens the other side of this AI bubble. It's not necessarily the economic impact, which is, of course, extremely worrying. It's more like what does technology and who owns it and who owns data and who owns the platforms look like afterwards.
I always think stuff like this is because they're not necessarily directly linked, but it gives you the sentiment of the time, doesn't it? I mean, actually, in some cases they are directly linked. It's a conversation saying, "Well, I hope this." To your point, oh God, if these guys are the only ones, then we're in real trouble. But also, there's another part of this, which is, well, then we'll have to pay full price for it. I don't want to do that. It's going to be really difficult. If they don't have to compete and make it free, then it's going to really suck for us. An example of that, I think, and again, this just goes not to keep leaning back on the AI bubble bursting. We're poking it as much as anyone else right now, Duncan. Is that MIT study? Obviously, everyone jumped on and got very excited. If you look at the methodology, I would argue it's probably not that robust. If someone said that to me, like, "Oh, we've done this thing. It's only been 6 months. It's not immediately transforming our business." I'd be like, "Oh, okay. Well, let's give it some more time." At an enterprise level, very few organizations would expect returns within 6 months, especially for something as new as AI. But what was interesting was how quickly everyone jumped on it. Right? Yeah. And that becomes an example of the sentiment of the time. And the fact that right now we have all of these big stories going around, but the number one is, well, we're worried about mass surveillance and we want to push for decentralized infrastructure so we can effectively protect ourselves in whichever way, whether it's stopping like a giant hegemon taking over, is a testament to how seriously people are taking this.
Yeah. And I think it's not just about, I'm just having a look at the stories that make up the themes. It's not really just about decentralization. It's also about openness. So it's also that split between open source and closed source. And OpenAI, FNAR, not very open. They've released some open source models recently as a kind of a paying lip service to the open source discussion. But nobody's interested in open sourcing. I think in our podcast that we did on open source, we talked about how Mark Zuckerberg and Meta were a kind of an unlikely proponent of open source AI. That is slowly shifting back. I think they're kind of like, well, maybe not. Nobody else is doing it. So there is concern within the builder community around open source versus closed source, and there's concern around decentralization versus centralization. And I think the bubble bursting is the point at which that decision, as it were, gets made.
Yeah, I think a big part of it for the big tech guys is if you're running up a multi-trillion-pound credit card bill,
You got to pay for it at some point.
Right. Yeah, exactly. Yeah. And look, it's not untrue that open source can be a very profitable line of work. But at this scale, it would surprise me if their investors said, no, you keep the money.
Yeah.
We're doing this for philanthropic reasons. And, we hope everything's all fine at the other end, but don't worry about it. It seems very unlikely to me. So, and I know OpenAI, obviously the big topic of conversation there is whether or not they're moving away from not profit to for profit and closing as much as we can. I think a big part of that is, well, look, if we want to spend trillions on infrastructure, we need that model. That's the only way of doing it.
Yeah. They've been playing around with this for ages. The GPT, in ChatGPT, you get things called GPTs. In Gemini, they're called gems, and other platforms, they're called different things. They're basically ways to give custom instructions to an LLM to make it into a very specific tool or an agent or whatever you want to call it. When the GPTs were first released, they were released into something called the GPT Store. So it was envisaged that they would monetize it. They didn't, because I think they realized that people wouldn't pay for them. Sora 2 is free at the moment. It's open just to people in the US. You need a code to get invited into it, but I don't think, as far as I can tell, because we don't have access to it in the UK. I tried. You actually have to pay for it. They then kind of nerfed it to make it less powerful, and people are a bit annoyed. They're trying to figure out how to monetize this technology still, and again, we've been saying it for ages, nobody really knows how to do that. But they will keep trying, and they will keep going, and they will keep A/B testing us to figure out what we will pay for. Because, your average person on the street is not going to pay for a £200 a month subscription to ChatGPT. I can't afford that. So how they're going to monetize it? Through enterprise use? Well, enterprises are, in some cases, struggling to see the value and therefore pay the companies for its use. I still think at some point it's going to focus on consumer use of AI, and there's going to be some way to monetize that consumer use of AI in the same way that Google monetizes things like Google Maps through advertising. It's going to happen. It just depends how that manifests.
Yeah, I think it being embedded into the infrastructure of daily life is probably the most plausible way of getting the returns that they need. Mm-hmm. So, and we talk about this in some of our other research, but if they can get a chunk of every purchase that's originated through their bot, then that would probably do the trick. I think the days of people ever paying full price for this, even if it becomes cheaper and more efficient, are over. The second you do something for free, the idea that you'll get someone to pay for it just becomes very, very, very tough.
Yeah.
And I was talking to someone the other day, and the cost varies so much, and obviously the companies themselves downplay how expensive things are to actually run, because it's in their best interest to do so, both for attracting investment, but also to convince people to use it and kind of use it more and more and more. The idea being that it's sustainable already. But let's say it's $10 a question, a meaningful question. Give me the answer to this. Go through our systems, etc., etc. And one of the big selling points for this is like, it's like having a team member. It's like having your own PhD student or whatever. And I think $10 actually a question is quite cheap by the sense of how much it actually costs right now. But imagine if you had a colleague, and every time you asked them a question, it costs you $10.
Give us $10. Yeah.
Yeah.
Just no.
You wouldn't have that person around, would you?
No.
Or you just wouldn't ask them that many questions.
Yeah.
One, two a week. So it becomes like that for me becomes the problem of, well, maybe this technology doesn't live up to the hype. And I don't think it's a bad technology. I think it's just economically not quite right size for the problems it's trying to solve.
But let me counter that a little bit by saying, if you weren't paying somebody a salary, but it was a pay as you go, $10 to ask this person a question, suddenly that might make a bit more sense. If you see where I'm coming from.
It would, but you would use that. So again, you think about a contractor. So that's really what we're describing here as a contractor. The reason they charge more is because you use them less effectively.
Yeah.
Right. And I think that's so. One of two things happens. It's either priced into the ground to the point where you can get like a subscription service. And we're talking enterprise use here. It'll be different in other walks of life. But where it has a compelling use case. So it is like, oh, here is my PhD assistant that sits next to me all the time and helps me do my accounts or whatever it is, which I think was OpenAI's big push, which got ripped apart to quite amusing levels almost immediately, I think, on LinkedIn. People are asking really tough PhD level questions. It was like, well, I have no idea what you mean. Or like just doing basic maths.
It's just 2 + 2 = 5, because they're not meant
getting
for...
it wrong.
Yeah.
But the other point is if it is based on how the model actually works, because you have to spin up all the machinery and everything to answer that question. So that's where the cost base is. People would use it less, and therefore the company would earn less and wouldn't be able to pay off that massive credit card debt that it's running up. Again, just gentle bit of air out of the bubble, just over a period of time. We should quickly talk about Quantum, which is the company that was called out in our latest piece, because that has been bouncing around quite a little bit as an interesting little journey all of itself, and is now sitting within hidden gem territory. It's actually been sitting in hidden gem territory for about 3 months. And I think that's how we view Quantum, isn't it? It doesn't get enough of the love it deserves, but builders quite like it. Well, in terms of bubbles, there are some Quantum companies that have been posting 1,000% plus increases. So there's a lot of investment also funding into Quantum. Now, in the write-up, we don't necessarily say, oh, no, it's another bubble coming, but, it does feel a bit bubbly. But there's been some interesting news. I think the latest one, they actually announced quite a bit, but HSBC spends a lot of time looking at Quantum, and they've announced that, hey, we think we've got algorithmic trading sorted as a result of Quantum, which would be a massive game changer for how the financial system works. So that's got a little bit of a jolt in the public imagination. And I hope, Duncan, for Quantum's sake, and for clouds in many respects, because it's been very lonely in the momentum zone by itself, that by next month, our next review, Quantum will have moved over into the momentum zone, because there's a lot of buzz.
It'll be interesting to see. I think Quantum will struggle, personally, with the momentum zone, simply because of public perception of it is difficult to understand exactly what it's going to do. It can solve problems that traditional computers can't. Okay, well, what does that mean for me as a person going about my everyday life? It can do algorithmic trading. Okay, cool. What does that mean for me? These people have won the Nobel Prize for Physics about quantum tunneling. Okay, I don't understand it. I think that's the reason why it will struggle to get into the momentum zone. But I guess we'll find out.
We'll certainly find out. And I'll tell you what it means for you, Duncan. It means that Wall Street and the stock market are now more complicated, which can only be a good thing. I think if history tells us one thing, the more complicated that gets, the better off we all are.
But I think it lends me to the final point we'll make on this, which is around how these technologies, even though we're kind of plotting them as different things, they are entangled. Quantum can't really exist without next generation infrastructure. Nobody's going to have their own quantum computer in their basement as a company. They're going to need to access a big tech company's quantum computer to do things as and when they need it, not running all the time necessarily. So that next generation infrastructure is inherently tied to quantum, as it is, as we've been discussing, to AI. What's interesting is to see that if the technology is struggling, but the infrastructure is not struggling, or if both of them are struggling, or whatever. So it's good to see these things and how they're interacting with each other.
I suspect it is this bubble bursting bit, just to bring us back full circle. Don't let a minute go past. Just remind everyone that the bubble may be bursting. But all of the technologies took a dip on conviction, didn't they, this month? Almost all of them. I think one or two have bounced back a little bit, but almost all of them have, which shows you that, like to your point, how interconnected it is. The second you get kind of a consensus opinion that things are looking a bit wobbly, all of the tech kind of dips. I mean, there are a few that are kind of off in their own little worlds, I guess, to an extent. So like I mean, cyber's bounced up.
Cyber security has bounced up, but then that's
loads of hacking.
Yeah,
could be more in demand.
yeah.
If it tried.
Yeah.
I think green tech has bounced up. I think there was some really good news recently about the amount of the world's energy that's coming from renewables and bits and pieces like that, which is interesting to see, because that's become like a bit of a political wasteland to an extent. I don't think we need to name the reasons, but it's just become unpalatable to discuss green technology and sustainability all of a sudden, but perhaps less so now. But yeah, all of the others have come down a bit. And I wonder if it's exactly what you're saying, where it is that they're all interconnected. So people kind of worry if one goes down, they all go down.
Well, I think if you look at the chart on the website, just how many of these are just in the skeptics corner. Part of the chart, like not all of them, and some of them are bouncing around, but a lot of them are actually just sitting in that bottom left-hand quadrant and bouncing around within it. And I think that just speaks to a general view of technology at the moment. This AI bubble, the tech bros, Silicon Valley, massive companies, billionaires, generally people struggling with cost of living and stuff like that. People are just a bit like, well, I'm fed up with technology. It's not solving problems for me. It's centralizing wealth. It's centralizing authority. And that's why we're seeing a lot of the stories that we're seeing be quite high and the sentiment be quite low about them, or at least apathetic.
It's almost like you have a problem with capitalism, Duncan.
Well, I'm just reading the data, interpreting the data. All right. We look forward to discussing this again next month. In the meantime, we'll do some more podcasts on other things, I'm sure. So thanks for listening. Be back soon. Say bye, Ollie.
Cheerio.
See you later.